I just want to come back to the Euro Aussie because it's been a really, really interesting move. If I just go back to, I'm going to use both platforms actually, because I've got my Renko on MT5 and I've got the charts on Ninja Trader. As you can see, I've got the 60, the 15, the 10 and the 3, because we've had some really nice examples of the Wyckoff, certainly with effort and result, and well, particularly with effort and result. In other words, and also telling us that the move that we see on the chart is not really going to carry on much longer. But if we just go back to the Renko. At the moment, when markets are very spiky, they're very whipsawy, there's a lot of volatility, and you can see that if you with the candles, there's lots of wicks to the top and the bottom of the candles. And I've said this before, and I always say it, and I say it in all my posts on Facebook as well, is you really do need to look at a chart, some kind of time-based chart, either a Renko or a tick chart, which basically it takes all the noise out. It doesn't have the element of, first it doesn't have the element of time in it. This is the Renko for the Euro Aussie, and it's based on a value of a 3 pip for each of these little bricks. And what Renko does, it does a number of things. Specifically for those of you who have the quantum indicators, is the way we've developed it for MT54 and Ninja Trader, is that it gives you it highlights potential entries, potential trading opportunities. That's the first thing. And the way we look at it is we look at the trend dot, which is a little dot that appears on the brick. The trend dot also appears on the time charts, and I've got just the trend monitor, I've got the pivots on here, I've actually got a fractal on as well, and I've got obviously support and resistance, which is price-based support and resistance with MT4 and 5. And basically what these lines tell us is that when there is a solid line, then we can expect that price support or resistance to be a little stronger. It's been tested over a period of time, and that actually makes that level much stronger. But the level is quite an interesting level, is 84.50 that we see here. And if we look at the alignment of the dot and the trend monitor, this is where we had a kind of reversal setting up. It wasn't so much a reversal in terms of accumulation and distribution. You know, there'd been a long phase of congestion, but it was more based on the fact that there were some anomalous candles in this price region, and I'll show you on one of the time charts. So basically, we'd had the run up, as we can see here. We had a nice blue dots and blue trend monitor. Then, as I said, it came to, it really didn't go into any kind of congestion. It came into the 84.50, as you can see here. There was a little bit of a pullback, and it just didn't seem to want to go higher. And then, as I said, bit of a transition in the trend monitor, not to a bright red. The kind of rule of thumb is, and it's one that I use and we suggest you use if you have the indicators, you really want to see a solid match of a certain number of dots, maybe 3, 4, possibly even 5, and a change in the trend monitor. But what's also interesting about this trend lower, and this is just an example of the kind of moves that we're seeing at the moment, it's not smooth. It's certainly going lower. If we take sort of a kind of entry point at this point here, it was bright red, there was red, but you can see here that it looked like there was a little bit of a pullback, but that didn't go to bright red. We did have a change of color of the trend dot. We've got 3 colors of trend dot. We've got bright blue, we've got this gray, which is like it's when the price goes into a sort of bit of congestion, or we've got the bright blue. But it did pull back. We had a pivot, then we had quite a strong resistance line come up again. That changed to this intermediate color, and then it moved back into the bright red, and the move carried on but it's not smooth. We had a pullback here, we've had a pullback here. We actually had 2 blue dots come up here but the trend monitor held and held, and it's kind of held all the way through up to the London Open. And of course, the London Open, I'll show you on the time chart, there was a lot of volume came in, and it looked like, oh my good, there's a reversal. A lot of traders would have jumped in thinking, oh, brilliant, not just on the Euro Aussie, but on other pairs, because the London Open volume comes in, price action looks as though it is going to reverse, it draws traders in, and then it reverts to the original move lower. Now, what's interesting here is there was a change of blue. This also went to this intermediate color. And as I said earlier, there is nothing wrong if you're in a trade coming up to the London Open and you have some pips in the bank, then, you know, the London Open is just so, all sorts of things happen. Just take it, because you can always re-enter, and you know, and as I said, you can always re-enter or perhaps look for an opportunity in another pair. This is obviously on the faster time frames. On the slower time frames, I've got the hourly chart up. The London Open would have just been a little bit of a blip. So it really depends on the time frame that you are trading. Now, what I also want to say, as well as deconstructing the trend for us without the volatility, what the Renko also does, it's a measure of momentum. Now, this trend here doesn't have momentum. If you go onto my Facebook page, there'll be plenty of screenshots there of trends with momentum. Basically, you just get a solid line of red bricks just falling, 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 falling. That tells you there is momentum behind a move. But what this is telling us, there has been a move, but it's been a bit labored. There've been some pullbacks. There've been some, you know, it's just not very, it just hasn't been moving very fast. So that's what the Renko also tells us. So Renko can help you with your entries. It can help you keep you in. It can help you with maybe if you want to come out, but it also gives you a sense of, you know, what is the momentum that is in this move. So that's what the Renko is. If you keep that level in mind, which is 80 in the 84.50 region. I'm just going to go to the Ninja Trader version of the charts, and I'm just going to pull up, I think it's both. I've got the 3, the 10, and the 15-minute. I'm just going to have a look at my crosshair in, because that's probably right. We have a look at 84.50. Where did we start at 84.50? Let me just move this out of the way so I can't see the values. Here we are, 84.50. It's basically in this region here, and we can see here from this is 84.43. It's about here. Support and resistance is one of the tenets of volume price analysis. So we can see here already, if we had the Renko chart and the time chart, we can see illustrated on the time chart that this particular pair was attempting to breach this level. This is 84.40, 84.44, 84.50. You have to be a little bit flexible with levels. But on the Ninja Trader chart, you can see here there's a very, very strong level of resistance in this region. So is it any surprise that the price then moved lower? I explained to you when you saw on the Renko, we could see there's this trend lower from this region has not been smooth, and we can see just how choppy, how volatile it has been on the way down. The Renko took away a lot of this choppiness and whipsaw price action, but it was, you know, it wouldn't have been comfortable if you had simply sat in it on a time-based perspective. Then it went to a little bit of consult. This is London. This big candle here that we see here with this huge wick that we've seen to the underside, a lot of buying coming in. You think, great, that's going to go higher, and I'm going to go in and buy, and I'm going to put a buy order in because I've had this move lower. And what happens is, bang, it's pushed down even further. Now we're possibly getting the reversal in the Euro Aussie, but that is a very, very typical trap that you would see at the London Open. Now, if I just find my 10-minute chart here and move that out again, as I said, I wanted to show you about the effort and result, if I can remember where they were. Let's have a look. Where am I here? 10-minute. 8 to 35. This is here. This is the 10-minute. These are the two candles. This is on obviously on a slower time frame. Immediately we see there's a much smoother price action. This is this nice move higher that we also saw on the Renko, although have a look, there was quite a lot of congestion at this point here. The congestion phases are really, they're reflected, they're explained by Wyckoff's second law of cause and effect. And what you have to remember with that is with cause and effect, you have the element of time. So the longer a market or a pair in this case is in a congestion phase, when you get the breakaway, as we see here, lots of volume underneath it, it is going to go, it's going to give you a nice move higher. We have three nice candles. Then we go back into a congestion phase. We've got this candle here, not a lot of volume underneath it, which tells us it's possibly going to go higher. It does go higher, but these are the two candles that I want you to have a look at. The spreads are narrowing, as we can see here. The volume underneath here is reasonable, but the spread is still very narrow. Then we get another one, and what these candles are telling you is an awful lot of effort going on, reasonable amount of effort, but you're not getting an awful lot of result. You're not getting a lot of reward for what you are seeing on this chart on the 10-minute. And then when you look at what is happening on the faster time frames and you look at what is happening on the Renko, you begin to see that price is really beginning to struggle at this level. It actually got slightly above 85.50, it got almost to 85.60, but as I said, you have to be a little bit flexible with levels. But these are the two little candles. So even if you just on your chart, you look for candles and price where the effort is not being rewarded, there's no result, it's not compatible, that immediately would signal to you that either the move is coming to an end and potentially we are seeing a reversal move coming along, or you could even use it to say, do you know what, I've been in this move, this isn't going to go any further, I'll just take what I've got and I'll see what happens. Then we start moving lower and the volume is rising. You have to bear in mind this volume doesn't look very much compared with what you are seeing here, but this is London. This is a huge volume surge. This volume at the time before this came in, you would have read it in the context of the session, and we can see here we've got the down candles, we've got volume pretty much holding on, keep it is consistent with what we are seeing. Then we have this little up candle, quite a nice little up candle. We've got a pivot high, but the volume isn't very high. This is a key candle as well because it's another, it's got quite a nice wick to the top of the candle, very small body, but look at the volume underneath it. So that tells us there is more weakness coming. Support and resistance, the way we display it with our indicators is it's price-based, which is the hatched lines, but these lines, these shaded areas on the chart, this is support and resistance based on volume and is part of the volume point of control indicator, of which this yellow dash line tells us that it's the fulcrum of the market. It's a period in the price action when there is an agreement between the buyers and the sellers. So we're hitting not price-based resistance, but we're hitting volume-based resistance. And the effort to rise here, reasonable amount of volume. I'm just going to put my marker just slightly to the left. As I said, it doesn't look a lot compared with what we're seeing here, but at the time that would have been enough to certainly raise a red flag, and we know that is going to carry on high. Remember, the Renko would have still been moving lower. Then it moves lower, then we move back into a congestion phase. Again, we've got an effort to rise, and once again we have another anomalous candle here. We've got a sort of shooting star with a reasonable amount of volume, but look at the next candle. To me, that's like a trap candle. People see that and they think, oh yeah, it's going to carry on lower. The next one, what happens is it moves higher, not a lot of volume underneath it, again with the next one, and then it starts to roll over. And this is the other thing you have to be aware of with signals on VPA. you will see a signal and it will seem a very, very strong signal, and suddenly you will think, oh, I will jump in because it's a shooting star with a lot of volume. And often what happens is it doesn't reverse on that one signal. It has to be a collection of signals, a collection of candles. You have to, you know, just, it's very, very tempting. You see a big hammer candle, you see a big shooting star candle, and you think, oh, fantastic reversal coming along. I am going to jump in, and it's, you know, and you know, make lots of pips and lots of money. You have to look at it. You have to wait for the next candle, look at a collection of candles, look at the support and resistance, just look at the multiple time frames, and then decide whether in fact it is a viable signal or not. And the other thing I would say, certainly with the forex market, is you can have the perfect technical setup in forex, and everything seems to, all the stars are lining up for you, and you know the trade looks like it's going to you know, going to come about, and suddenly it is upended. And it's usually upended for two reasons. First of all, either because it's at the time of a session crossover, as we have seen with London, and it will settle down. It may settle down afterwards and carry on in the original direction, but that setup, that signal will be invalidated by that. Or you can see a setup and suddenly a piece of, you know, a geopolitical piece of news will come along, a piece, or you may have omitted to factor in perhaps a piece of fundamental news. It does happen. Doesn't invalidate the methodology, it doesn't invalidate the setup, but the setup has to be coordinated, if you like, with the session. What is generally, you know, is there a piece of fundamental news coming along? There's a lot of stuff that you have to bear in mind and put together, but that's what part of being a trader is all about. And I said earlier, on the hourly chart, this is what we've got. As we said, all that noise, all that whipsawing has completely been absorbed on the hourly chart. The move lower for this pair is really the big resistance that we can see here on the volume point of control. We've got a reasonable amount of volume. Again, you have to take it as relative. This is 4 o'clock in the morning, which, you know, it's Asia. It's been going down. This is the interesting candle. Let me just lift that up a bit. These are the 3 candles down where we had rising volume. Then we had a slight fall in this volume here. So we know that, you know, there's possibly going to be a little bit of a pullback. The next candle tells us there has been a buy, but look at the volume underneath it. That is not consistent with, you know, there is buying, but it's not very strong buying, and in fact it carries on lower. The thing about these 3 candles is that they are quite they're quite narrow. They you know, this is not distorted by London. It's just a very, very liquid market. You just have to be aware that London does have this effect on the reading of the volume on the volume histogram. Doesn't invalidate it. You just have to you know, take account of it. That's all I've got to say. Is there anything you want to say on that, David, or is that? Yeah, sure, no problem. Right, I'm just going to stop there, and I'm just going to pass you back to David.